The Headwater Horseman here, it's October 31st, 2023. First of all, thank you to the banner sponsors. Then let's get right ahead. Markets, stocks down, dollar up, gold up a bit, silver down a bit. Like always, I mean, seriously, this is all noise. I mean, if I had to guess, I would guess that every other day anything is up, almost every other day everything is down, or anything is down. So like I've said before, in my opinion, watching the markets and metals every day, trying to read something into it, I think that's what everyone else is doing, because it's hard not to. And I think they let that affect them. So all of a sudden, they're bullish on a company, whatever, they're like, they did their due diligence, oh, this company is cheap, and then they see on that particular day gold is down 1% or something, and they see the juniors down 3% on average, and all of a sudden that fortitude you need to actually buy cheap just gets blown away, because everybody is negative that day, so you become negative, because we're herd animals typically. So it's like, in my opinion, I think the best thing to do is just kind of brainwash yourself into thinking that, hey, this is not important at all. It's just small rings on the water, I was going to say, and always have a longer term horizon. Okay, I like company X or Y because I think they're, in 12 months they will have put out this kind of news, and if that happens, today's price will look really, really cheap, and then you have the improving sentiment, since we're at extreme low sentiment, not extreme high sentiment, so we have that in the back pocket. At some point in time, we know there's going to be, again, that's like, there's going to come a time when this sector goes from depressed to less depressed, not depressed, hyped up, total greed, etc. So that's going to come someday. So it's like that's, you can take that to the bank, that this sector will be up a lot sometime in the future. In the meantime, we focus on what we can control, and the only thing we can control is the price we pay for the bets. Anyway, so let's start off with some Bai Lo Wisdom. He who is more afraid of a price decline than overpaying shall fall victim to both. And this is, of course, I think this is very true. What gets people fearful almost all the time, and you can see that in the forums, you can see that on Twitter, etc. People get fearful, and people focus on if they think a stock or whatever is going to go up or down in the short term, today, tomorrow, next few days, etc. People will typically not buy a stock if they feel like it's going to go down today or tomorrow or in the next few days. A stock that is in an uptrend, they feel the opposite about. They think, well, everyone's positive on this stock today, so I think it's going to continue to go up because it has gone up recently. That's obviously how you end up falling victim to both. You tend to overpay because if the uptrend has been very strong, it's more likely that it's not cheap anymore and is closer to the next trend change, which would be down, and that could be a correction or whatever. If it's a market, it might be we're closer to the next bear market. So that's it. And it's hard not to do that, because believe me, I get FOMO myself. If I like a company, like I think this is cheap, but sentiment is depressed. There's no excitement. So there's no excitement to rub off on me. Then I'm like, yeah, it's probably cheap. But the same company, if that starts going up 5-8%, then I'm like, yeah, I knew it was cheap. Then I start kind of chasing. Of course, that's, again, FOMO. It's like you believe you're missing out. All of a sudden, you feel that you were right. Just because someone else is kind of suggesting. Oh, sorry. Someone else is kind of suggesting that you were right by bidding it up. But then you're after that guy. You want to be before, you want to be in before everyone else gets FOMO. So it's like, but to that point, and I see that a lot. People complain even if they have a win. It's like, sold too early, whatever. It's like, we're not after perfection. Believe me, it's not that people don't invest perfectly. That's the reason why 95% doesn't beat an index. It's just the reason is that we do a lot of big mistakes almost all the time. That is the reason. And I've talked about this before. It's like when I showed the Bear Creek mining chart, and people say, well, how do I know when the exact bottom is in? If you look at the chart and you see how big the swings are, it should be beyond obvious that you certainly do not need to be in at the exact bottom. The moves in the junior bull runs is like 300 to 2,000% over 8 to 3 years. Why on earth would you need to pick the exact bottom? And if you don't, it's like, yeah, that's why you're not making any money long term. Obviously it's not. It's just that you make totally the wrong, major mistakes. You started off buying a sector or the stocks high, then you sold cheap, then you waited for it to go up whatever, then you buy back in again, closer to the next top, then it goes down, then you do the same things, that nobody breaks the cycle. That's the big mistakes. Perfection is absolutely not needed. Absolutely not. And I think it's the hunt for perfection that makes us do a lot of mistakes. We want to be perfect market timers. Oh, I think this stock is going to go down in the short term. I better get out now because I can't afford to have a 10 or 20% correction in my position. Like, that's the problem. No, it is not. And that's the funny part. Everybody that's talking about, I'm after 10 baggers, you see them in the forums or on the Twitter every day commenting every short-term move. Does that sound like somebody that has the patience to just stick through the volatility for 3 years and let the actual 10 bagger materialize? No, it's not the buying that you make money on, it's the holding. And most people can't hold because they feel that they need to be right on every short-term move. So, but again, does that make sense? If a 10 bagger typically takes 3 to 5 years, and you're looking at every single daily swing and trying to reposition perfectly for every single daily swing, how is that playing the 10 bagger game? It's not. It's like you're trying to win every single battle, but you're gonna lose the war. That's how I see that. But it goes against human nature not to try and fix stuff. Like, we always want to be doing something. It's like our human mind can't comprehend the fact that, 95% or 99% of the time, the best thing we can do is do nothing but hold. Not trying to trade at all. Just buy and hold and hold. It's like the buying is once. Then the holding period is actually where you make money. So I'm getting spammed. I'm gonna. Now it should be better. I think I muted the sound, but I think the mic picks my voice up at least. Okay, so let's just, some common sense here. In a bear market, 99% of stocks go down. Okay, why do you need to take that seriously? And you still see it, and I was like that as well. It's like, asking in the forums, like, why is this stock down today? I own it. What happened? What happened? It's like, Well, if 99% of stocks goes down over a 3-year period, which is the bear market has been over 3 years, does that mean that every single company became worse and were idiots? No, that's the sentiment. It's just there's more money leaving the sector than coming in. More money, there's a net drain on the capital going into the sector. That's all there is. In a bull market, all of a sudden 99% of stocks go up that are still around. So I mean, when you think about, I mean, you can look at a chart. I mean, that's the crazy thing. When you just take a step back and look at how predictably emotional and stupid a volatile sector like this is, you know for a fact, if you at least if you've experienced, if you've seen it, if you've been a part of it, you know that even more to be true. That's like literally in a bull market, almost every single company goes up a lot. In a bear, almost every single company goes down a lot. Knowing that, how is it, or why is it so hard for people to make money over time? Obviously because they're not a part of the bull market. They get in late and then stay for the bear market. And then they don't stay for the next bull market. Because otherwise it's just absolutely crazy when you think about it. Well, if you know, hey, in a bull everything goes up. I can make money on almost anything in a bull market, and I lose money on almost everything in a bear market. How do you make money? Well, being a part of a bull market from the lows. But it's just I don't know what it is about investing. Almost nobody stays for the bull market. Almost everyone gets in at the end stages of a bull market and then sells out before the next one starts. But it's absolutely crazy. It's like anybody, if anybody's crying, it's like, I'm down 50, 60%, whatever. It's like, what could fix that? Obviously a bull market. Because in a bull market you make money on almost anything you own. It's so obvious. It's like, why can I afford bear markets? Because I'm always 100% long from every bear market bottom. That's how I can afford a bear market. If I got in late in every single bull market, after the fact, 6 months after the bottom is in, and now it's starting to get obvious that was the bottom, I can't go back in time, and I don't know when the bottom is in. Anyway, let's look at some news. October 30th, yesterday, Goliath drills 513 gram meters AU equivalent, hole assaying 65 grams per ton AU equivalent, or 7.9 meters. Like someone pointed out, the most of it is in the I haven't done the diluted grade, but let's just use the slimmest hit here. It's like 186 gram per ton AU equivalent over 2.75 meters. Even if you dilute that by 50%, that's obviously bonanza. You could dilute it by 4 times and that's still bonanza. This is, I was going to say pure money. As they're still pending on 100. Whoa, okay, I didn't know. Jesus. Assays are still pending on 110 holes. Did they drill that many holes? Wow, okay. I guess it won't be a boring winter for Goliath. We don't know what the assets are going to be, obviously. But this is probably, I'm pretty sure this is going to be a mine one day. It's not pricing in that it's going to be a mine, but I think it's going to be a mine. And Canada, British Columbia, underground mining, more environmentally friendly, not too far off from Dolly Warden's access road, and where they could put a barge facility. I think there's Tidewater, whatever. I mean, again, I don't think you need to be a rocket scientist right now. I mean, first of all, it's like, okay, how many gold, silver projects look this good in Canada right now? That's not many. Maybe, there's a few high-grade underground gold plays, because they look to have, I mean, Goliath not only has, grade, they have the size potential, they have an enormous, land package with a lot of targets. So it's obviously one of the, top 3, I would think, lode gold precious metal explorers in Canada, or at least British Columbia, if you factor in how advanced it is, how good it looks, how big it is, yada yada yada. Then you look, okay, is it pricing in that it's one of the best projects, undeveloped projects in Canada? No, I don't know what market cap is, 70 million, 75? Obviously not. I mean, a good mine should be worth, I don't know, 500 million. A great mine, maybe 2 billion, whatever. So, I mean, that's the bets. That's the bets we're seeing out there. It's like you can climb up the, project quality ladder very high, and still you're paying like there's some run-of-the-mill project somewhere. That's like the, I was gonna say, the frustrating thing. Not the frustrating thing is that like every bear market that has gone on way longer than it should, etc., the prices gets absolutely retarded. This sector is totally silly. There's buys all over the place because there's a net drain. There's not enough capital going in, and it takes down everything, which is the best part, because it's like really the ebb and flow thing. So now there's an ebb. So everything gets starved of capital. So not even, I mean, there's very few stores out there that gets priced accurately. Because if it gets priced accurately, everything else looks cheap, which gets people to sell the one that's, maybe fairly priced and buy something else. So it kind of, there's very few peaks in this valley of cheapness. Yeah, so it's like, hey, do I think Goliath is going to be worth or valued a lot higher in the next few years? Absolutely, I think so. Unless this project for some reason gets shit really quickly. I mean, I think that good projects in tier 1 jurisdictions, they're actually going up in value. I'm not saying they're really going up that much in price right now, but I think given what's happening with East versus West and their kind of the resource battle, or I guess it started off from via technology that's like, oh, China's banning graphite exports, whatever. It's like we don't know what's going to happen geopolitically. But if you're in the West, where we have not really spent a lot of money in on resources, etc., not in our backyard, we'll buy it from Africa, we'll buy it from Asia, whatever. It's like I think the headlines, geopolitical headlines, I think the value of everything in the West resource-wise is going up. But it's not, that's one thing that's not reflected in the markets today. The current gold price is not even reflected, let alone the fundamental trend of these finite resources, the supply-demand picture, or the geopolitical picture. I think it's absolutely crazy. And it can still be crazy. It's like they say, the market can stay irrational longer than you can stay solvent. That's why I don't use margin. I know I'm right, that this sector is way too cheap, and this sector never stays this cheap for forever. So I know this sector is going to go up. But I don't want to be needing to be right on the time frame. Imagine if like, oh yeah, I know this sector is going to go up 500% one day, so I'm going to go on margin, so I'm going to make 1,000% or whatever. It's like, yeah, but if you're wrong on the time frame, maybe you needed to be right within 6 months, and it takes 8 months, and all of a sudden it's like that's too greedy. That's what I'm saying. That's too greedy. This is a inevitable play that this sector is going to go higher. So how do you capture the inevitable? Staying power, obviously. If you know something is going to happen, the best risk reward is to make sure that you'll be a part of the thing that is going to happen. This one was really nice. District and Boliden signed definitive agreement for Tomtebo and Stolberg properties in Sweden. First of all, I like the fact that, okay, this kind of signals that Boliden thinks that Sweden is getting better as a mining jurisdiction after our right-wing government took power not too long ago. And for District Metals, it really beefs up. Well, first of all, there's an earning for 10 million Canadian, which is half the market cap of District Metals. That's Boliden will have to fork that up in order to earn in. In order to earn in and create a joint venture where District Metals will own 15% of the combined Stolberg and Tomtebo properties. So this is the combined project that will see $10 million spent for the earning to get through or be validated, or how do you say it? Almost identically large project packages, and you can see the scale bar here. I mean, that's like what, 18 kilometers or something. This is probably like 12 something. So those are pretty beefy projects, and Boliden are the world's foremost experts on exploring in the Bergslagen region. They have the world-class Garpenberg mine here. If you read the news release, it looks like the Stolberg property is more like Garpenberg, and the Tomtebo property is more like the, I think it was the Sala or I think it's Zinkgruvan, which I think that belongs to Lundin Mining. Still, I mean, this is a vote of confidence, obviously, from Boliden, that they're like, yeah, Tomtebo, we certainly see potential there, so let's do it like this. You get a slice of Stolberget as well, or Stolberg, and we get an interest in Tomtebo, and you will get cared for $10 million, then you get to keep 15%. So I mean, if you think about it, 15% seems low, but let's say that Stolberg is worth at least as much as Tomtebo. In that case, one could say that they would get to keep 30% of what Tomtebo would be alone. That's not that bad. And to be partnered with the best mining company / explorer in Sweden, and especially for that district where they have found Garpenberg, for example, which is a huge mining complex. They have multiple deposits and they know how to explore that. And District Metals still, I think, has what's his name? Oh, now I don't remember her name. But the person that kind of led the team of when Boliden found the rest of the Garpenberg deposits, and that went from a mine that was going to close down to today be one of the best underground bulk mines in the entire world. So this for sure kind of de-risked District Metals a lot. There will be 10 million worth of news releases, and if I'm not mistaken, I think I read that District Metals will be the operator as well, so they will kind of control the news flow. Otherwise, it's typically that many of these deals, they get controlled by the major, and who knows, sometimes they just don't really care about helping the minority partner out in terms of news flow. But if District, it will be the operators, I mean, they will control the news flow, and at least $3 million will be spent at Tom Tebow. That's the requirement. So I mean, let's say that, you know, spend a few millions, and for some reasons, like Boliden says, well, we're not gonna go ahead with this earning, then District Metals would have had some free money. But I think Stolberg is the more advanced one. So who knows what the 15% of Stolberg would be worth? But it's like, when you think about it, 15% of a Boliden-sized project portfolio, or project, if you combine these, surely would be worth a lot more than 20 million Canadian. And then, of course, District Metals has their massive uranium portfolio, including the second or largest uranium deposit on Earth, and a bunch of other projects as well. So like, District Metals is just absurdly cheap if you look at the sum of its parts. Just absurdly cheap. I think this de-risked District Metals. And the funny thing is, like, what happened with price when they announced that Boliden is partnering up with them? I think the price was unchanged. Okay, what does that say? Well, first of all, it's a sign of the times. It's like being an insider in this sector, because there's positive news can come out and you don't need to pay anything for it. So it's like, you have your car, somebody upgrades the car, puts in a new engine, and you didn't have to pay for it. Would you buy the same car at the price you used to pay for it, but now it's a better car? Of course, you would be happy to buy it. You would be happy to buy it at a higher price because it's a better car right now. So that's the thing. You get free stuff in bear markets. That's why I can't. It's like, people complain about this sector right now. How does a sector get easier? How does investing get easier than getting free stuff and not having to pay for it? Seeing what the news is. Seeing positive news after the fact, and you can still pick and choose. That's risk-free reward. And people complain about this sector. That's how you know that nobody has a chance in this sector, when you see them bitching and moaning about price. You know, oh, this came out and price didn't go up. Okay. There's always something. It's like, if price goes down, nothing changed. That's a better buy. All else equal. If good news comes out, no price change. That's a better buy. All else equal. You should always know what the most rational thing to do is. What happens to most people, obviously for the sector overall, they buy these juniors. Juniors come out with positive news. They don't get anything for it. If they come out with negative news, they get punished for it. Okay, yeah, it's a rigged game. Yeah. It's rigged against us. It's rigged against holders right now. It's rigged for buyers. In a bull market, it's rigged for holders and rigged against buyers. Because if a news item comes out, or whatever, it immediately reprices, so you don't get a second chance as a buyer to buy something for free. So, okay. So for holders, it's rigged. But even if you're all in, like me, you can still also be a buyer. How do you do that? By selling something, and then you get money to be a buyer of something. But most people get pissed off because they don't understand, and they don't understand that things will change, that stuff that's not priced in today will get priced in someday when the sentiment is better, which is inevitable. And they just give up. They go and find something where it works. So it's like, think of this. A lot of people, they own a bunch of stocks. Like, let's say these stocks, 10 stocks they own, they put out 6 months worth of good news. Price doesn't change. What do they tend to do? Do they think, wow, these are just becoming better and better buys, I should be buying all 10 more of the more shares of the 10, increase my ownership of the assets here because the assets are going up in value while price is the same. So I'm getting more for the same amount of money. The purchasing power of my dollars are going up. Of course not. They think, well, okay, this doesn't work, this sector doesn't work, and they sell out. So when the value gap has increased for 6 months, price to value gap, that's when they end up selling. Which goes back to my previous point. That's the reason why people don't make any money in this sector over the long term. Because they make the big mistakes. They can't hold. That's the problem. So I mean, 20 million CAD. I don't know what so they're gonna be fully fine, and that's the thing. It's like there's no reaction in the price. Okay, so nobody gets excited. Okay, fine. Everybody's focusing on the uranium. That's fine. But there's potentially 10 million worth of work in news releases that's gonna come up from the polymetallic side of District Metals, and there's not a single person that got excited by that. Could that change in the future? Could some of the results be good? I think so. So this is just for district holders. Might not look like you got a reward, let's say, because there wasn't a revaluation in price, so you didn't get paper profits as a reward. But the case is a lot better. Your shareholdings just increased in value. Risk went down. More news to come. The future news flow got beefed up, and you still have the uranium bullets. So all of a sudden, District is a better company today. Price is the same, so that just means the risk reward just got better. And this is the stuff. This is why bear markets are easy, because there's no-brainers all over the place. But since that is not reflected, I mean, if everything got repriced like it should, there wouldn't be no-brainers. That's the thing. It's like people complain about the sector being shitty right now, or the sentiment is bad, but that's the reason why this sector is so easy right now. So you can't have a good sector where everything responds perfectly to positive news and still, just have no-brainers, let's say, from a risk-reward perspective, spilling all over the table. No, those are mutually exclusive. You need the best investment environment requires the worst sentiment environment. So here you can see a kind of a close-up. Here's the Garpenberg mine, Stolberg, Tom Tebow. Again, this is one of the best, most efficient underground mines in the world. Sweden typically has very, very low-cost mines. So from a mining perspective, this is great. Might there be some, NIMBY? I mean, obviously it's not way out in the middle of nowhere. Sure. Still, I think the Western governments are waking up to the fact that, they're putting more and more minerals on the critical metals list. And it's like, I like the saying, there's no ESG consultants in a foxhole or in a trench war. The West is starting to wake up to the fact that the world economy, including our own Western economy, runs on commodities. No commodities, no civilization. So I think we're in for a long-term trend where mining is going to go up more and more in value in the West. District Metals, 21 million CAD. They got some cash as well, like 2 million at least, funded for the Boliden is footing the bill on the district base metal place, so you don't need dilution. You don't take dilution from that. While on the topic of Sweden, Gold Line closes first tranche of private placement. I think Gold Line is market cap of 3.5 million. I participated pretty big in this financing. I'm biased because now I'm a shareholder, of course. And more importantly, I was going to say, it's like, I think Sweden is gonna get better. It's already gotten better. I think the Boliden Newswood district is proving that as well. That Boliden thinks that Sweden is getting better, and I just like the idea. They own. Let's see here. This ground belongs to Gold Line. They own like 85 kilometers of strike along the Swedish Gold Line belt. I participated relatively big in a private placement, so I can buy interest in 85 kilometers along the Swedish Gold Line for 3.5 million Canadian. And this is very much underexplored. There's deposits. Here's the famous Boliden belt, kinda, where Boliden got its start. Some of the lowest cost mines in the world are found here in northern Sweden. Energy is really cheap, not too much houses, or there's not too many population centers. Infrastructure is still great, prospectivity is great, and all that. I just think that's absurdly cheap. They kind of control a large part of the most prospective gold belt in Sweden, where you would really want to have a mine because of the low cost, for 3.5 million Canadian. Yeah. So it's, if you look at the market cap, if they find something, we go into a gold bull. Obviously, if they found something significant, we go into a gold bull. Obviously, a 10, 20, 50 bagger is not out of the question. They also brought Tash Singh on board as the CEO, and he's from Discovery Silver. He got that company up to, I think, over 500 in market cap, actually. I think, when he left, I think he had gotten it up to 500 million. So once I gotta ask, or I gotta think, like, okay, when you come off from a success like that, and you go into you accept the job of being a CEO of a micro capper in Sweden, what kind of opportunity would you need to see in that case? I'm not a geologist. I'm pretty sure Tash Singh is a geologist or something along those lines. Well, he's well versed in mining, at least. I think this is super cheap for all this potential here. And on that note, we have Barsele, which has the deposit here. This is understated. The resource is bigger. I'm very bullish on... Well, I think Barsele is just extremely cheap as well. Let's see what the market cap is. 21 million Canadian. 21 million Canadian for the second largest undeveloped gold project in Northern Europe, or at least Scandinavia. That is just incredible. Here you have the designated area hosting Central Avansky Rosenson as national interest. What the actual economic value of this deposit is, if there would have been a PA done on this project right now, I don't know. I would be surprised if it was below 500 million. That's just a high octane speculation / guess on my part. Still, 2.5 million ounces. And I've written a piece on Barsele. Very conservative resource. The geologists I've spoken to, even some that don't own shares, really like the geology, really like the project. And it could be much larger than 2.5 million ounces. 45% belongs to Barsele. 21 million Canadian. I think Gold Line is cheap. based on the potential. When you factor in what Barsele has already, confirmed by Agnico Eagle, and what the potential is at depth, along strike, in the other targets, within their, I don't know how large the land package is, I don't remember. But there's a lot of explore. Here you have the 1 kilometer scale bar. This is just absolute. I mean, almost half of this project, 21 million Canadian. Second largest undeveloped gold project in Northern Europe. Almost half of that for 21 million Canadian. I think they're doing a financing right now. I have a lot of shares of Barsele. I'm not sure I can participate in the financing. But that's almost the only way to get into this store because it's so tightly held. So I think 5 shareholders control 75% of this. Including, I don't know how much, I think, yeah, Gary Cope, the CEO, I think he owns 18 million shares or something. This is his primary focus, his baby. There's a reason he just keeps on buying shares. This is absolutely disgustingly cheap. And it's not high risk. The only risk here is that if they don't get a deal done to get, let's say, Agnico out of there, or, you know, because Agnico is focusing on Canada, that's the thing. The only risk here is, not the only risk, but like the quote risk with Barsele is boredom, and the well, I was gonna say, like it's the same for the bear market right now. We get big rewards in the future by investing in bear markets if, or the trade-off is that we need to stick it out and be prepared to be bored for maybe months or maybe years, and then the reward is typically several hundreds of percent. But that trade-off is not what most people can do. They cannot sit on their hands. They cannot buy cheap, wait for a year, let's say, for a 300% return. That's too much for most people. Well, they can't even see that it's going to happen, typically. And even if they knew it, they couldn't stand it. Most people cannot stand doing nothing but hold. That's why people don't get 10 baggers. Dolly Warden Silver announces 10 million strategic investment by Hecla. Obviously, this is like, I don't know how many times they put money into it. But it's like I said before about Dolly Warden, there are not too many high quality silver plays out there that I think. Dolly Warden is one where it's like low risk. I mean, if you like silver, you are bullish on silver, I think Dolly Warden is one of the few no-brainers out there. Tier 1 jurisdiction, advanced asset, vote of confidence from a mining company that surrounds them as well, probable acquire sometime in the future. They tried to acquire Dolly Warden before. So it's like, yeah, okay, are you going to get a 10 bagger from Dolly Warden? Maybe not. If we go into a silver bull, will you be sure to make money on Dolly Warden? I think so. So this is, in my opinion, like a relatively low risk, medium to high reward proposition. It's not one that's like, yeah, they're valued at 5 million market cap. The sector gets hot, they make a discovery, you get a 20-50 bag or whatever. No, it's not, but most companies will never find anything substantial anyway. When we talk about advanced silver assets in tier 1 jurisdictions, the list is very, very small. Dolly Warden is on that one. Very well run, obviously access to capital, vote of confidence, etc. This is why I think for any silver bug, I think like Dolly Warden is one of the, yeah, I think there's a probable multi-bagger in store for Dolly Warden. It's just waiting for the silver sector to get hot. And I don't see Dolly Varden diluting the crap out of the company or going bankrupt or anything like that, because they have one of the best, one of the best advanced silver assets in a tier 1 jurisdiction. So they're a go-to place for any silver bug. Red Canyon initiates first drill program on its 100% owned Ping South copper gold property. This is one of the Newquest Capital Group companies. Other ones are Headwater Gold, which is partnered with Newcrest/Newmont. The other one is Inflection Resources, which is partnered by AngloGold Ashanti. What I'm saying is that this is some of the best explorers in the world, and this is another company that now just went public. I think management insiders own 57%, 9% institutional, including Crescent Capital. 1.9 million cash, 7.7 million in market cap, or around that at least. It doesn't even show here, but it's like there is not a lot. I mean, this is like Headwater and Inflection. This is incredibly tightly held. If they make a porphyry discovery at any of these projects, you can just imagine what could happen with the share price. 5,000 for sale at 0.285 cents. 5,000 at 30. 5,000 at, I don't know how many shares I have. I participated in a private placement with as much as I could at the time, which wasn't too much. I think I might have 150,000 shares or something. But this is one, like, if they find nothing, I might end up losing money unless they find a new project, because that's the thing with this Newquest group. They have a lot of skin in the game in all of their companies. So they always think long term. And they have a bunch of projects. So it's like, if they find something, maybe I'll get a 50 bagger. It pays for 50 other stocks of similar position sizes. If nothing happens, well, I'm going to lose 0.3% of the portfolio. Or, let's say it goes down to 0 or whatever. Or 50%, whatever. You get the picture. High risk, high reward thing. It's so cheap. If they make a significant discovery, we're talking 10, 20, 30, 50, 100 bagger potential. If they find nothing, I'm gonna lose money. Okay, that's high risk, high reward. Headwater Gold announces high-grade gold in initial results from the 2023 Spring Peak drill program. Let's see here. So this is the Spring Peak project, which is kind of the flagship project. That's where they have where they've had most holes into. Already know there's high-grade to bonanza grade golds, low sulfidation epithermal system, close to Hecla mining, so low bar for success. This was this release 20.5 meters of 2.59, including 1.21 meters of 13 gram per ton and 3.11 meters of 9 gram per ton, and with some silver as well. Did they only report? Oh, they didn't even count the silver, so this is, at least 14 grams per ton. It's like 9.5 grams per ton, AU equivalent. And here you have completed or in progress as is pending. So there's a bunch of holes just from the Spring Peak project. They're drilling 3 other projects at the same time. And they are simply stepping out. Stepping out, a long strike, down dip, up dip from where they've already hit before. I don't think they have the they've only zoomed in on around the disco zone and stuff. I was there on a site visit recently. Again, it's like superb explorers, skin in the game, funded by Newcrest. And dirt cheap. So that's the thing with these quote high risk, high reward stories. How many of these exploration stories do you need to make a significant or prove up a significant deposit? They're so cheap that any single one of these earlier stage high risk, high reward stories, I mean, they already have like 2 discoveries. They might have 4, we don't know. The Midas is going to be interesting to see from Headwater. They're drilling that one now. I think they started off with 2 drill rigs, which kind of tells you how much Newcrest and Headwater likes that story. 7.5 thousand shares traded today. Again, nobody on earth is looking at this sector. Nobody on earth is reading these news releases. Nobody on earth is acting on anything positive really, except a very, very select few stocks. You have never been a bigger contrarian in the last maybe 20 years than right now in this sector. Nobody agrees with the idea that this sector is a buy right now. That is just absolutely crazy. Gold at $2,000. Silver at $23.5. Geopolitics crap. Merit of gold and silver up. Supply demand picture positive. And nobody sees that. It is a remarkable sector right now. Then we have Tectonic. They had a news release, I think it was a day ago or so. Acquires 3 additional potential intrusions on trend on the flat gold project. So now they have 20 kilometers of strike within this potential intrusion belt. Here's where they're drilling now. I think this is where the historic drilling was done, and they picked up this, and this. So now they have a string of pearls, perhaps, of intrusions, whereas they probably have what looks to be the biggest intrusion in the bank already. And there's, I think there's placer gold coming off from all the targets up here. I mean, we don't know where the gold actually comes from, obviously. But who knows? You can see the scale bar down here. So this, I mean, is 1 kilometer. I mean, it doesn't look like much, but this might be, 1 to 2 kilometer wide intrusion, if that is in fact an intrusion. I mean, this here's, what's that? Yeah, 4 kilometers, something like that. So these are big targets, even though, the project, the total project is so large, so it doesn't, I mean, the scale doesn't really come across. What does this mean? Well, this could be a company maker. Now they get like 3 additional kicks at intrusion cans. And obviously, if this is a company maker, if they only find 500,000 ounces up here, they're probably going to get mined. But if any of these alone contain 500,000 ounces, they would not be mined. So the threshold for success is lower, obviously, the more targets you have. I mean, if you find one mineable deposit, then these could become satellite deposit. But if you only own this, for example, you obviously would need to find a standalone mine up there, or, I don't know, 5 million ounces or something. So lower threshold, diversified to the upside, higher blue sky potential, not really any added risk. Because it's gonna, it will cost money to drill, obviously. But I think this is where the probable growth is gonna come, and this is gonna be the cherry on tops. Do I mind? Absolutely not. It's like what I've said before. I like to be a real estate hoarder in this sector right now. When the sector is really cheap, we can buy out prime ground, prime jurisdictions, prime projects in some cases, advanced projects in some cases, for almost nothing. Because nobody on the planet Earth sees it. Nobody on planet Earth cares about resources or commodities except every government, increasingly so, even the Western governments. It's just absolutely crazy right now. I like these. I like to buy as much real estate as possible, because when we go into a hot sector, this sector will become hot one day. The real estate prices will shoot through the roof, even without any confirmed ounces in the ground. Just based on potential. When potential gets priced again, all the good-looking projects with potential will go up a lot in price. If you want to buy a company if you wanted to buy a good-looking exploration asset in 2011, I would guess you'd have to pay multiples of what you're paying today, without even confirming any gold. Nothing changed, geology, de-risking, whatever. So I want to hoard as much, and that's like, again, with Gold Line, for example, 85 kilometers of strike for 3.5 million Canadian. There's only one gold line in Sweden, and they own 85 kilometers of strike. And I can buy all that potential. Let's say the main gold belt, 85% of the main gold belt in all of Sweden for 3.5 million. And I wouldn't say Tectonic is cheap. No, expensive. I don't know what the market cap is. Maybe 50 million. Okay, it's not the cheapest one. But what's the potential here? If they find, I mean, we know Snowline Gold ran up to 600 million, 650 million. That's more than 10 times what Tectonic is priced at right now. Is it a guarantee? It's then, next Snowline, absolutely not. Still, Snowline did that in the worst sentiment environment since 2015, I think, at least. If this was 2016 and Snowline would have put out those holes, Snowline would probably have peaked at $2 billion. So that's what we're also front running. Perfect scenario, perfect storm for Tectonic would be to A, confirm this is a major discovery, keep drilling, which further points to this being a major discovery, while we bottom out the sentiment in the sector, so we have a ramping sentiment environment with a rapid growth story. In that case, that's how you get 20 baggers, 50 baggers. You buy something at the sentiment low, when it's priced the cheapest, when it's early stage. If you're lucky, you have a growth story for the next 3 to 5 years, and a increasing sentiment environment for most of that time. So you multiply the value of the company. Let's say you multiply the ounces belonging to the company, or inferred ounces, whatever. And those ounces get multiplied by the increasing sentiment levels. That's why you don't need to be right a lot. If you buy a basket of juniors, even early stage, well, I guess especially early stage, because the valuations out there for some of these high risk, high reward stories, if any of these turn into a significant deposit or a story, we go into a hotter sentiment environment, one of these could pay for 20 others. Needing to be right 1 in 20 if you have equally sized positions, that's not a high hit rate. And the opposite of that is, of course, to simply only buy the when plays, kinda. You only focus on the beta plays where you know it's like, yes, on average, I think the advanced explorer or developers, whatever, are going to throw off 400 or 500%, or let's say 300 to 500% on average when we go into the next sentiment peak. Okay, well, it could go way beyond that depending on how high the sentiment peak is. The flip side of that is these more if stories, where it's like, if it works, it's not going to throw off 300, 500, might throw off 2000%. You don't need to be right as often, obviously, but it's going to be way more, clunky. It's like, maybe 1 in 4 actually becomes a success. 1 in 10 becomes a success. Whereas like, if you're buying advanced asset, it's like, maybe 80% of them will go up a lot, if you know what I mean. And obviously in these cases where it's like, if you have 20 high risk, high reward stories, early stage stories, some make a discovery hole, or one make a discovery hole, and you're like, okay, I'm selling that. It's like, that's not how to play a high risk, high reward stories. You can't pay for 20 other juniors or 19 other juniors that fail of finding something by bagging 50% of the one that actually made a discovery hole. Because the discovery hole is when the 10-bagger journey starts. That's not the end of the journey. That's the start of the journey. It's like Hercules, for example. They just put in the first hole. Yeah, it's run up from that hole. But if that hole, it's run up because what that first hole might lead to, what that represents. If that is a major discovery, we're going to go way higher than we are right now. Am I against? Yeah, you take profits in Hercules Silver. You take money off the table. No, that's up, each his her own. But still, it's like, that's not how, if you want to get a 10-bagger, you need to see maybe 2 years worth of news releases and hold it through that time. It's pretty common sense. Anyway, consider me biased. I own shares of all companies mentioned, I'm pretty sure. Some are banner sponsors as well. There's no guarantee that any of these will be up in price ever. There's no guarantees of anything in this sector. So only risk reward. If you think I only own shares of things that for 100% sure are going to go up in value, then you are completely mistaken, or go up in price or value, you're completely mistaken, because I would be a trillionaire already. Maybe I'm happy if I get 20% success rate in early stage stories. Maybe that's going to be enough. Again, when we go out of, because right now, yes, the market is rigged against holders, but it's going to be completely different in a bull market, because then every single stock that has not gone to shit is going to go up, and a lot of shit is going to go up as well. Anyway, thanks for listening. Bye.